if someone could just... No, it wasn't me singing. That was Flo Rida before we started the live.
No, he was singing.
Oh, maybe I was. But they shouldn't be able to hear that. I didn't think I had my mic on. Okay. Let me know if you can hear, and I think that that's okay for the bass, so I'm not too loud, and hopefully your system will catch up to the speed. I'm going to get rid of the mixer there. I'm going to type in, can you hear me? There we go. Okay, good. Actually, this is Boeing that we're looking at, and it's had some weakness, but that actually looks good. Let me get rid of some of these lines, make it a little clearer. So particularly, I love this combination right here where our extreme histogram dips below this cyan line, gives us a clear indication of oversold, and that oversold is always welcome, particularly when it comes at the same time that you've got an extreme oversold from our Power Momentum 2. Kind of gives you a little bit of a early warning, because it's going to happen before you get a confirmation from like down here on the shakeout. You can see on this it's still continuing to decline for Boeing, which means it still has some expressed weakness, but your trifecta, and if I can increase the size of this, let's get rid of price here, we're not worried about it real quick, just as an interesting one. Love to see when this yellow line moves below our blue. That gives you an indication where you've gotten extraordinary oversold. And I always like that. Let me get rid of that moniker for the Trade the MBI. Back here to my overlay. Hide, there it goes. And I'll show the little tick feeder. Just pointing that out. So if you see charts that come up, I typically, and this is a good question I had from someone, was sometimes you have different indicators on the chart. Typically, I usually hold on to about the same three. Now, why did that moniker not come off? What did I do? There it goes. Okay. I was like, why is it still there? Okay. Perfect. I'll typically put up three of these, usually the expanded ratio histogram, power momentum, the shakeout. You may or may not see the extreme histogram. Sometimes people prefer not to see it just because it doesn't have the price on it. But for me, it's very easy to just put them back. I can come in here and just click, ABM, and boom, it's going to pop up onto price instantly. We can shrink our charts very easily as well. So lots of functionality with the TradeStation and being able to do that, and I think it's convenient, especially with the fact that I've linked the charts to our little list right here, so I can click any one of these if I want. Let's look at MasterCard real quick. It will just pop right on there once you click it, and there you have it, and you can get a much different view that way. Let us take a look at, we're going to have the Fed announcement here any second, so let's go over to where futures are. Now this is interesting. This happens to be futures with the adjustment to my trend model. This one also is the trend model, but the difference between these two charts, and I'll show them side by side because you'll see one is starting to turn red here. This is a range bar. So each one of these bars actually just represents 1.25 points on ES futures. So that would be equivalent to, 5 ticks. And you can make this any size you want. Doesn't really make any difference. Still, you can get your indications off of it. Becomes an effective, kind of a unique approach. There is a secondary one that has our regular. Let me see if I've got that window handy. More than one 5,000 tick. Here we go. Let's try this one. There it is. Alright, so this is the traditional trend model, and I'm not seeing much of a variation from today as far as the trend change, and that's because we haven't reached an oversold situation that would generate conflict, or at least a differential based on it. Now, we noticed it was a big difference. Well, gosh, I think it was the other day. Right here, what day is this? This is the 18th. Scroll back. Yeah, we were showing the differential where it was red at the start of the day, and we turned green much earlier, and then pivoted up with the adaptive setup. So kind of subtle change, but definitely different because it's trying to capture bottoms a little bit more clearly. And we can see here that we don't have a whole lot of. Yeah, that was definitely a chaotic event, and it resolved much lower. Got signals to the downside and turned around. Let me go back to our regular. I just wanted to see what was happening because right before you get the Fed announcement where you should see some real dramatic move. We're not getting a whole lot of reaction beforehand. That's kind of interesting to not be seeing anything of particular note. Let's put on an extreme histogram, see how oversold we're at. Now, typically when I'm looking at the charts like these, I'll have most of them on there because for me it's second nature to see it. I prefer to have that overprice. So for scaling, just put it directly over price. It just gives you a visual of what oversold is. I mean, I love this range between the cyan and the red. It means you've gotten to a point where you're modestly oversold here. You're going to be looking for your first initial bounces, and you're going to want to be riding that wave, particularly if you've gotten oversold. You're below the zero on the power momentum. And just because I was just showing this one for trend model purposes, but definitely want to add in the shakeout, a few of the others, get them back in there. So I haven't darkened these for the visual that I usually give for everybody else, but let's do a quick run on some of the regular time frames because we're going to have this event and we should start to see some wild movement. So if we look at our Apple initially, a lot of little buy signals, from the daily standpoint, if we look at Apple, it was not too thrilled with the action overall. I mean, nothing particularly has changed when it comes to our overall trend for Apple. We're still looking for some improvement, and at negative 21 on a daily, we're still not there. We need to get inside that negative 12. I don't think you can see that color very well. Let me see if I can change it. Is that better? Maybe you need to make it a little thicker. Add a little depth to it. So, that's where you want it to get inside that negative 12. It came close to it back when we were at earnings. It just didn't have enough to continue. And this was like here. This is where dot alerts were coming in. We had the buys going into it, and then the day of earnings, the red dot short came in and didn't resolve until after the open. But yeah, that got ugly. And then we had overbought here in the last day. It's been holding up pretty decent given the overbought nature. The question will be what happens when, or if the market fades a little bit. And we've only now started to see those signs. If we go back to the ESF and look at this overall daily chart, click it here. What you're seeing is the two different, and this is where I'm making the adjustments for the trend model to see how effective it is going forward. But what we've been talking about is this setup right here, waiting for this crossover. You've had a lot of people calling tops every single time we get here. They've been calling them all along here. We've not gotten any of those sell signals at all. Now, clearly, when we look at this from a range standpoint, if I were to squeeze this chart in, it's pretty consistent peaking point that this is. We had a little bit of an exuberance here back in, what was that? Back in September, October, where it got well past it. But what we're looking for is the magenta to start to roll over. And we haven't seen that as of yet. I mean, you can see all the way from here, even though we get the crossovers, it was like, well, I told everyone, just expect modest retraces. Just even like today. I mean, I posted that yesterday at the close at 15:05 on the futures. It was like, we were just looking for, small retrace back, nothing hyper dramatic. I mean, some of us have already, you know, been convinced that the economy was slowing and not improving, and to finally see it come out as a statistic, it's like sort of anticlimactic. The question will be, how much is the Fed going to throw at the situation, and that's what everyone will be looking at. Are they going to double, triple their bond buying? Are they going to increase it over what they have done? And then, the inevitable questions: how much more can they do? It's getting a little ridiculous. I wanted to get you so you can see the readings, because what we're looking for, I mean, when it gets flat like this, you actually have to look at the readings, because visually you can't see it. So we had 22, kept moving up just fractionally, then to 23, 26, 23.73. Today's 24.14. So, yeah, sure, we might get a crossover. That's going to give us a little bit of a suggestion for the, again, more retraces, because we've also had positive extremes. But not yet. I mean, it's almost, once it begins that rollover, then yeah, I definitely am going to be looking for more aggressive to the short side. And this is kind of one of those things I point out where traditional indicators will give you that overbought, oversold a little too early, and then it just stays there, and you have no means by which, then you can start looking at these minuscule little movements of stochastics and that, and that's not going to help you. It's not going to give you enough clarity. I'm just going to read the questions here. Well, when we're talking about shakeout, so I was just about to bring up the shakeout right here. When we're looking at it from an oversold standpoint, this was right before Christmas. Okay, we loved this setup because we could see we had a bunch of fractal buyers coming into the setup as the year was ending. We dipped below the yellow line, and then boom, as soon as you pop back inside of it, um, that becomes a clear buy. You don't, I mean, it just pretty straightforward. Now, typically what I'll look for is about 3 to 4 bars of that coming up, and that's where you get to this crucial part where I talk about the warning, where you've just about reached zero, and is it going to break out to the upside, or is it going to fade? And that becomes typically a point where you see this kind of crossover, and you begin to be like, okay, I got to be a little bit more careful with the setup. But now that we're getting into here, what I was talking about for people looking at this on an overbought setup, yeah, we've reached the warning line, the yellow. Your purple's all the way up here, so no, we haven't gotten to what I would call a critical overbought, like some people have been saying the market has been extreme overbought in that, and I keep pointing out to probably just deaf ears. Most people really aren't even looking at it from this standpoint. We've not been overbought because the extreme histogram, from a future standpoint, has not been overbought. We got to like 1 day of it right here, and even that was still minus 20. That's not overbought. Minus 8 inside of minus 8, yeah, that's overbought. So, for all the terror that's been out there, everyone talking about shorting, and we've seen a ton of them every day posting the same thing, market's going down, blah, 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 and we just haven't seen it. But now this contraction of the red and the yellow line, that begins to become a concern. What I'm looking for is my white histogram here to dip below this yellow line. And when it does that, that becomes, points of concern. Now, it did it right here, dip below, so immediately you begin to look, it's okay, I need to know the next day. Now, what often you'll get for those other indicators is it will pop up at the open of the next day, and you get an early warning. This is stuff that we've shown. We should show the IWM cores. We'll get all those in there, absolutely. Why not? But it's kind of an interesting point because we're plateauing at a warning line, and there's a reason I made it yellow as a warning line, because it's in fact time to say, okay, you need to be paying attention. All right, there are other times where it's a cakewalk. You don't have to think about it. We're not. Well, we're moving out of that time period. That time has faded, and no surprise. I mean, it's been an excellent run for a month, and like I tell people, as good as it's been, and we've been very cautious. Trade the MBI with our trades going into this year so far. fine. I was looking for just a little more retrace than we didn't quite get it. Otherwise, we would have had this nice little write-up. But, this can all be wiped out in a single day. I mean, we have not moved enough to where this is significant to the point where one day drop will pretty much wipe out the year's gains. And it's going to happen. No question in my mind that it will happen. It's just a matter of how effective the timing elements become. And this is where, we can have debates. And we can get into some of those practicalities. But wait, I wanted to go back and start whipping through just more of these little intraday signals. That's the daily app. Let me go back here. We can look at, I thought I had that chart squared away. PCLN. It's interesting. I've not been liking the PCLN daily chart. It's been having some decent moves, but we started to get some conflicts here the other day with longs and shorts in the setups. Not been particularly healthy. Same thing was happening with Google, except for you ended up with a ton of when you see this setup, it tells you that the same group is looking to acquire a significant size position. I mean, it's not an accident. And, they came up, hit their targets right in about here. Let me see if we can get an info window to pop up. All right, so the target was 760.57, and you can see the high, 760.95. And people always say to me, well, I didn't want to sell at the target. I want to hold on. Well, you can, but I'm just pointing it out. Targets are there for a reason. These guys look for them, and then they fade out of them. It's just what they do. It's not personal to you or anything. It's just trading for them. 15-minute Google. That's been a lot of little pop moves. And it's interesting because even as far as Google has been, you can see it's gotten oversold. And, that'll be a topic for another day. I call this my Spider-Man. Let me show you this one. It doesn't happen too often. You get the peak, comes up, crosses. Now again, if I put these in there, you can look at the numbers. Alright, the dark cyan is a positive number. So positive integer, and the green number is a negative integer. Well, only in my my charts and my math, you can have a positive be negative. Okay, and this is one of the difficulties I'm running across in converting like my trend models, because the computer has a hard time understanding that you can be in two places at once, both negative and positive. So yeah, and practically it's not necessarily the easiest thing for anyone who's not living in a subatomic world to be thinking about negatives being positives. But in this little subset math, when we're talking about the tiniest of variations, we have to account for it. And the minuscule numbers that I'm talking about that we're dealing with in creating some of these indicators, it'd be surprising to people that you can gain such detail from it, but that's all right. It's very different than what a lot of people are used to, and that's okay. Nothing wrong with that. Nothing wrong with what they're doing. It's just I think that you're seeing more and more an intentional lag between reality and what's going on in algorithmic trading and how it's impacting overall markets and the way they're traded. But you all heard that from me before. You want to see Facebook in that? We're going to go through them. We got Facebook coming. No worries. RIM, this was an interesting one. People are all down in the dumps. And see, this is why I really don't pay attention to much intraday news or whatever, because it's not relevant to what the computer guys are trading in that. We had the sell signals back up here when there was a lot of, positive hype. Fine, we got our sell signals, and it's trailed lower, but we're reaching a point where we're almost oversold. Now, see, this gets into a situation of, all right, what situations are worth playing? When I'm below this red line 0, yeah, I get more interested in a lot of different stocks and a lot of different plays. Here, you're kind of in a no man's land. It doesn't mean that you still can't get a good pop. What I would like to start seeing is the rate of decline of my magenta line fading, and we can start getting into a lot of those little peculiar elements of it, but suffice it to say, it's still not in bad shape. I mean, you've got The orange still on the ERH above. We've got oversold. Pop back up here. Going to finish on a lower day with a higher extreme histogram here. I'm going to be looking for that open potentially with a crossover here. 1050, 1093, so the magenta will still be above. It won't quite give the buy. And so that's where the open will be interesting tomorrow, because you'll either get your crossover or this will fade back down again and give you a setup. But, I'm not afraid to play any of these that are moving upside down, sideways, left, right. It doesn't make any difference. They all present opportunities. This is the SPY, and you can see where the SPY, pretty clear the difference between it and the futures, and this was the dichotomy I was talking about. So I was expecting this first down move for the SPY as well as the cash index, and then typically what you get is this next little pop-up, and when it crosses over, that's going to be a much bigger sell signal, and that's the one I'm looking for to mimic with the futures. You'll find it here where you start getting lower peaks and then the crossovers versus higher peaks that start to fade. So, little things to look at when you're looking at the indicators that appear on the charts that I'm putting up. And again, you can always look at the primer that we put on for that PowerPoint setup that's on the website. And I think that I had been scrolling that across before. Let's put it up there again. See if that will show up now. The ticker, there we go. And that should give you the link if you've not seen it before. Yo. Alright, so, well, let's go ahead and change this one to Facebook and take a look at it, because I was just looking at it a minute ago. Right click, format our symbol. FB was not looking so great from a daily standpoint. And this was early on. So looking at the shakeout was a particular concern to me, because we're matching highs at much lower shakeout readings, and that didn't thrill me. You combine that with your lower peak here on your power momentum, that was not wonderful. The best thing I could say about it was that you had the orange above, but that almost flipped. So that was pretty close that the orange was able to hold up, and it got overbought. We were at positive extreme here when the gray dot short setup came in, which was looking for at least just a retrace of the low. It did that, and then a little bit more, and this came in on, gosh, that was Monday. So, unfortunately, does it look great? No. Should we probably flip to a 78 minute? And yeah, we should. So let me go ahead and click that on there, and by the time that one comes up, we'll be ready to take a look at it. But overall, been a fairly decent run. But it's like I was talking about for most of us. I get the signals back at 19. It was clean buy at that particular point, able to follow it. We got additional buys with the orange dots, even on the dips that came down here. So, a lot of our entries have been much better. Do I need to worry about, playing an earnings setup at this particular point? No, because we've done exceedingly well with the overall setup. Now, if you were, trading more of a longer term setup, then I would say you go over here and you click your ABM, and you follow it. When you dip below your lines, you're out. Your new buy signals, and you move back above. You stay with that until it drops back below, like it did here before, and you're out again. That's the effective way to trade it, I think. But there are gamblers, and there's always going to be people who just want to, go for the quick hit, and they're just looking for an opportunity to jump on a particular move. Let's go back to our futures here. We're starting to see some movement. Scroll my E-mini back in here. Alright, so we got our little mini chaotic event right there. Let's expand this a little bit as we decay. And it's going to be interesting, because I'm wondering how well things are going to hold up now, because you've got a real problem here. Unless the Fed is going to announce that they're really going to be dramatically increasing their balance sheet, I think you're going to start to see more volatility, not less. And it's going to be tough for a lot of people, because they're so used to now this nice incline of things. they're going to have a harder time reading some of these setups because it's going to become more specific to individual stocks, and there's going to be a lot of sector rotation, and that's how these guys will fool a lot of people going forward here. They're just going to be popping in and out of things, and you'll see stuff burst for no reason and then fall down, and you know people be thinking, oh yeah, everyone's moving into this one, and it's just going to be much quicker hits, and that's just the approach I think that they're going to take. Um, as this moves forward, just because there's not going to be the kind of set certainty. Yes, inflation is going to be creeping its head. I think you already see that with fuel. You're going to see it in food prices and those kinds of things. And that's where we had our metals bet, and I shouldn't even say it that way because it wasn't a bet. We could see clearly that we had a nice buy signal from our GLD. Same thing with SLV. Okay, helps if I put in the right name. GDL Fund. That's a nice trend. Look at that. That's falling beautifully. GLD. Well, the chaotic event that becomes an interesting one, sure, because this is what I try to explain. Each of the chaotic events, it's specific to the individual security. So regardless of what it is you're trading, you have to look back at that specific one. I can't give you a standardized version that says, okay, for all of them, when you get that kind of move, it's going to go this way. It doesn't work that way. What it's detecting is, what's the best way to describe it? I mean, think of it as looking at a bunch of grapes and seeing one that's a miniature, another one that maybe is turning into a, raisin a little bit of ahead of time that shouldn't be. It doesn't mean that the whole bunch is bad. It's just that it's starting to detect anomalies, and it spikes from those anomalies that shouldn't exist. And particularly, you shouldn't have a positive number going negative, and they do. Oh, from the futures one, yeah, we were looking at the futures. We can look at that one. I particularly find it interesting when you get those kind of oversold setups. I usually look for that first crossover, and then it's the second one that becomes attractive. But if we slide back here, you can see the last one. This was a huge negative, and that showed you that the anomaly was very ugly. Usually, really bad when you have your magenta high up. You typically want to see the magenta down below for any positive kind of reaction. But I haven't looked back at this 5,000 tick in a while to see which setup's particular. But you can see when it's typically over, you get a little bit of the retrace. The double events become very interesting because it's like multiplying a negative times a negative is a positive. Yeah, that makes sense. That's an easy way to describe it. Double negative equals a positive. So you know what? You'll have to type in for me what happens because I don't follow any of what the Fed stuff is. So if someone knows what's said, go ahead and print it on the ticker there and let us know because it'll be interesting to see. Normally, I expect a return to the mean. So from my standpoint, I would expect that you would typically want to spike back to your highs and you take out your lows. And that's normally what happens within a typical Fed announcement that doesn't have any significance. I'd be surprised if they do anything beyond what they normally do. Maybe they're going to announce they're going to keep interest rates at zero all the way through, 2090 or something. I mean, something ridiculous. I mean, as though they can really commit to keeping interest rates at zero through 2016, let alone even through the rest of the year. Because as the market pressure builds, inflation's going to grow. I don't care how many times they multiply their balance sheet. At a certain point, prices are going to go up, and they're just going to pretend that they don't count the inflation. It's just like we pretend that we're not counting the extra 9 million people who are out of work. We just don't count them. Works for me. I mean, we got great unemployment. You actually count the number of people who aren't working, and you've got legitimately, 16, 17% unemployment. That's the reality, and this is why you have negative GDP. Because even throwing $1 trillion at things, you're still not going to get growth. Now, that doesn't mean that the market isn't going to go up. because when inflation skyrockets and we have to have hyperinflation, you're going to have, yeah, 3013. I like that because that's exactly what they're going to say anything to keep the confidence game going, and that's all markets are in general anyway, because you're paying for forward potentiality anyway. And this is where, I'll have a lot of fundamental people get on my case. Oh, but you got to take into account there is an inherent value already predetermined with fundamentals in every price. The variations that we see from day to day happen to be traders wanting to both take advantage of inequities and just to randomly move price. That's just what they do. Okay, basically keeps it going. Oh, 85 billion in the bond purchase. I thought they were only doing between 40 and 80, so they're going to keep it maybe a little higher. But again, it's only going to have a marginal effect because the Fed doesn't create jobs. And as long as you have, and this is somewhat political, but it's not, we don't have pro-growth policies at this particular point. And as long as you don't have pro-growth policies, you're going to have this kind of stagnation. The question will be when we go from the stagnation right now and low interest rate inflation to high inflation. And this is going to be the transition that's probably going to develop more towards the later part of the year. And it's really going to have some interesting impacts because people automatically think that gold and those things are going to go skyrocketing. It's not going to work that way. You're going to have fits and starts, and what's going to happen with things like GLD, you're going to get these nice movements when the market is in a stable condition. But if the market were to tank, the people who've invested in gold, in some cases as a hedge, are going to have to remove funds from there in order to cover losses in other areas. And this happens a lot, and it's not going to be just this blanket, everything's going one direction kind of thought. So from a future standpoint, that's a nice little buy signal right there. That's going to pop. What's the target for that? 1503.39, so 1503 and a quarter from a future standpoint off the MBI. And that was good. It came down, didn't really even cross down super low below, but hey, that's just a 5,000 tick, nothing particularly special. Let's start going through some of the different stocks you guys have requested. Oh, I was going to point out gold while I was here. In general, Sherry, I think when you start to see most of the charts, you'll notice that if we have a chaotic event and you have your magenta pretty well up there, yeah, it's going to be to the negative. That's just because a lot of times, and this is where we get into some of the complexities. A lot of people don't pay attention to what overbought necessarily looks like, even within the power momentum. We understand that we can get very negative with the below zero line, and there's only one of them. What I'm creating is an adaptive one that will search out the median high of the peaks of the magenta, and that should give us a line that we can put on there that will give you an idea of when you've reached a particular warning line for the top side of the power momentum. Again, I never intended to even show the power momentum in that because of the complexity of the theory behind it. So I'm wonderful that everybody is able to follow the general concepts of it. I know getting into some of the minutiae and the particulars of it can start to get complicated, but in general, I think that simple idea of looking for this oversold setup with crossover keeps it simple. No need to overcomplicate it when we don't have to, because we can start getting into other concepts with the convergence of the lines versus their explosion to the outside, and that becomes a whole separate one. That's going to be power momentum class 104. I mean, 101 we're just barely at. By the time we get into 102, 103, and 104, I think you'll all probably qualify for at least a master's in theoretical sciences or something to that effect. But it's effective. That's at the end of the day, that's really what we look for. From a GLD standpoint, we need to see the orange turn around, and then you can expect a longer move. At this particular point, we got extremely oversold. We got our buy signals. We weren't interested in the green dot right here in the red trend, even though we were looking for a discount there. It became very attractive when we got the GAM because we knew that we had reached an extreme oversold. And this is that kind of that bonus that I look for. Oversold, extreme oversold, but now we have a little bit extra clue as to when that oversold has reached the imbalance of flipping a little bit earlier even than we're seeing from the Extreme Histogram. So I like that. Anytime I can get a little bit further ahead of the game, the better off we are. And, you know, uh, nice to get confirmation from your shakeout, and you continue to move on from there. So all that looks good. So let's start going through some of these. I wanted to go back to my adjustment one because I can just click through a bunch of the different names. Here we go. There's the Facebook 78-minute red trend. Some buy signals. It's oversold from that standpoint. Just didn't have anything positive from the daily. Baidu was an interesting one because we had this, and let's see, that's what happens when I flip some of these old arrows. That's not current. Stay on there. Alright, so we had that target from Baidu set up way back over here. It hit the target, and it retraced. Is there a shock to that? No. Can you take advantage of a reset? Yeah, when we cross back over here, you'll also notice, though, that we're matching highs, lower shakeout. That should be a warning that you always want to take, gains when you get those kind of setups. But we could get a reset right here to be able to take advantage of an additional move on it. No sense in being... And this is something that a lot of people have a hard time because I'm not afraid of any of these setups, the declines, dips, things, and that. We expect them, and we're able to manage them without much difficulty. You wanted to see that Facebook buy again? Yeah, it's going to take a little longer for that 78-minute chart to pop back up. There it is. What was that buy? 31.77 target from a catfish. That chart's too narrow. Let's increase it. There we go. Get you up close and personal with it. Who wants to be that personal with Facebook? There you go. I mean, it could be looking pretty good too from a buy standpoint here by the end of the day. Keep an eye on that one because now we've rolled up. Going to come down here, and you're going to get your crossover buy, and that's going to be a higher low. I try to use vernacular that's common to what you're used to with regular indicators because, I mean, it's applicable here. You're right at the zero levels from a 78, so, that could give you a possibility to make a minor attack from the daily, though. Still in the sell crossover. It leveled out pretty nicely. Could cross up above another day or so. What I like to look at, though, it's been maintaining its green trend in the form of, you get the ERH, well, orange, consistently stayed above through all these different little pullbacks, everything else. So it's been pretty nice overall. Let's look at FAS real fast. Alright, now I'm going to scroll back up in my chat thing here because I know some people put in some nice names. Cores, SLV, the IWM. You want to do Cores? You like Cores? Even the look, you're in trouble. Yeah, I'm in trouble with it. My 6-year-old has a Michael Kors, bag. I mean, what's up with that? Though Grace did great at her award ceremony, she was so excited. 6-year-old got recognized for her academics. Her and her sister both, actually, within the same month. Michael Kors, so had its little cell signal. Look at that wild event. That's unusual. Jeez, let me shrink that chart. I don't even know if we're going to be able to find something that looks like that. Chaotic event with a plateau. Wow, plateau. Where am I going to find that? I don't even know if I've seen that one before. Oh, this is a short chart. Let's get some more time on this chart. Let's get some more time. Well, it's supposed to go years back from 2003. Oh, well, of course, it hasn't been out that long. Duh. You just went public. No wonder. That's an interesting chaos event there. And no, when you have something like that, there's nothing you can do. I mean, if you don't have enough past history to look at to see a similar kind of event, of course, now it's in the record here. We've seen it. Very unusual. Yeah, that's interesting. Needless to say, I had a little bit of a crossover, kind of plateauing here in 23, 22. So this one actually had lower magenta readings, even though it looks flat. Those were lower. And that's where you do have to actually, go and do the work of actually looking at the numbers and seeing if they go down or up. Shakeout, did it dip below here? Was above the yellow there, and today is not going to be above the yellow. So it's going to kind of cement. And the question will be, does the yellow cross over here in the next day? Probably by the open, that could mean a little bit more of a retrace. A little bit more, not too bad. Let me do the IWM while I'm here. We like the Russell. In fact, you know what? Let me look. I think we may even have a TF on my futures setup right here. The mini Russell TF symbol. I don't even know how this one's doing from an automation standpoint. That's 66%. That's okay. Nothing too spectacular there for the last decade. I don't even know if I've run an optimization through on that, and that's something we'll go over tomorrow for the live event. Talk about setting up those futures, the different ways to, because you have to do more than just add a strategy. You've got to make a couple of little adjustments, particularly like if I show the, well, this happens to be the trend model for that I'm working on for that. And of course, it's bought at 103 and still, because of the green trend, it's going to stay with this until trend turns red. So like here it was green, turned red there, boom, gets out of that. It's pretty much a tiny gain. But in doing it, you have to format your strategies. And then you get into the details of the properties. And then when it comes into properties, you've got to put in, what you're going to allow for slippage, commissions, in your back testing. But in automation mode, this becomes critical. You have to be you have to adapt to the real world. So, for instance, when you turn it on, you can't be pretending that you're living in an ideal world. You got to adopt real world to current conditions, and you've got to make sure that your orders and that are getting out and doing what they're supposed to be doing. Otherwise, you will have all sorts of difficulties utilizing those trades. So, IWM from a daily standpoint, that looked ugly a while ago. That was back over here at 89.94. So, some people were shorting those a little early. This would not necessarily be early, a little early from the market sense, but you can see, this is what I was talking about on the shakeout, looking for the constriction of the red-yellow. Now, what often will happen here, and you can see it well past the purple line. So, this is why people have been clamoring, yes, overbought, but continuing to stay with the yellow, white lines popping up above the yellow. It was right here when it was the first day that it came down. That was at 90. So that legitimately would have been a clear point to say, okay, if I'm not going to short the market, I need to at least either take some gains, then set a stop. I need to either think about selling a at the money or in the money call. And in this particular case, when I'm well above my purple line here, in such a strong green trend, probably want to be a little bit out of the money. It would be the next wave up here. And what I like to look for to kind of gauge, and this is a little advanced for people with the shakeout indicator, you look for ones where the shakeout indicator will drop dramatically. Like here, you're just seeing tiny little drop. What's likely to happen with this is it's just going to come back up here. It's going to stay overbought for a little bit longer. It's when you get these severe drops after being extremely overbought, and then you start building a new high, and it's a lower histogram. Those are your warning signs that the market's done, just finished. And that's when you would then look to not necessarily sell your in the monies, but you definitely would be looking to create a ratio spread the opposite direction, either by buying a put and going reverse, because you don't always have to sell everything to still be hedged effectively, in fact. So that was IWM. SLV. Let's put up SLV. I know, we're giving market general ideas, the whole 9 yards here today. So SLV was a little late in its signal compared to what we saw from gold. But oftentimes when it comes to the metal, unless you get a lack of correlation, you usually have a pretty good idea when you're coming across to those setups. Not bad though. Gave a nice cross. It was right here. Same time, we got a extreme fractal. Let's put the extreme on there. Why not? We're all big enough we can handle seeing the extreme histogram. Oversold, just like gold. I mean, it's identical. No deviation at all. Who else we got in there? IWM we did. Amazon, Netflix. Oh, Amazon. Why not? Because we talked about Amazon just the other day. And it was hilarious because it had turned into the short from the red dot that came in. And fine, it was still looking good. Wasn't expecting a whole lot. We were extreme overbought, no problem. It's like, fine, go ahead, take advantage of that. Came down to it. It's like, okay, at that point, you want to be speculative. You just put your stop at your entry. Okay, if it comes back, hits you, knocks you out, fine, you're done. C'est la vie. If not, you're able to then follow your move. Now, I typically tend to play these with actual shares. A lot of people want to do options because they're looking for those. But even if you're playing that, the problem with the way some people approach the option setup is that they'll look at this and they'll see the target and they'll think, oh, it's cheaper. I'll just put my, buy my put at the target. That's not going to do it for you because if it only reaches the target, you're not going to get enough of a gain. Well, at least in my mind, I would prefer to buy the at the money where your price close is. That's going to give you your best delta, but that gets into a whole separate thing. The down target here was 276.93. And so it's funny, and we came down to the end of the day, and geez, mine signal for mine about ranges from, and I don't know why, 6 to 3 seconds typically before close. I'll get primary signal, and Amazon came down to the end and put in a green hawk buy up target to 268 in green trend, and boy, if it didn't just shoot up right after that. It took a few minutes, but it was interesting because it came down, closed it there, and then proceeded to just skyrocket on the way back up. It was funny. What are you going to do? I want to look at MA Netflix. Netflix is another good one because this one's been jumping all around. So, got extremely overbought. Gave its little sell signal up here. We dipped down below. Fine. And this is one of those examples of it opened higher. And we already had the sell signal as it opened, which was weird. And then you had this massive drop off. I mean, this histogram didn't start up here and then work its way down. No, it opened down here. So there's already selling set up within this configuration at the open. And that open was, up at the 172, and it continued to go higher from there. It went up to 177. And from the previous close at 169, when you're getting that kind of divergence and you're already overbought, it wasn't hard to follow that one for a little bit going down. Now, this is what I was talking about. You didn't get a dramatic dip way down here below where it resets down to the negatives and then starts to build back up. So it's likely to come back up here. It's going to create another little swoop. What I look for is the yellow here to turn before it crosses the red, and that would be a nice indication of continuation. But nothing too special with there. It's just got to ease off the overbought. That's going to take some time. What are we at? Plus 43 on that differential, plus 20s. I mean, that's huge. But again, do I want to be playing with it right up here? Not particularly. It's just not worth it. No value in the setup. The value was when we got the buy signals before earnings and that, and you take advantage of that play. You're going to get a little bit of a crossover here, but depending on where this peaks out at, you're going to end up with a lower peak, and then it may be an attractive short. Your BFF CLF. We could take a look at CLF. We love CLF because we're going to love materials plays, even in a weak economy as, pressures for inflation build. Where are you going to go? well, that's a whole different story. Where are you going to go? Um, CLF, it's coming off the oversold. It may not pop as fast as some people want, but we had all the right signals. We got oversold, crossed above. Those are all the things I like. Are we going to get overbought? That would be my only concern, is that we come up here, don't get enough of a push, and we get overbought. Still from that MBI overall, what are we looking at here? 38.50, 39 range roughly is where we should be heading for that off the setup. So we'll keep an eye on that overbought setup with it. Would have liked to have seen that pop straight up, because the bigger the differential you get between your magenta and your white initially gives you a relative expansion of what you can expect for price. Just to throw that out there. I know that gets a little bit more. For which one? We're talking about CLF on that. This is the thing that same story with Baidu. Yeah, it hit the target on that one. You can still end up with buy signals within it. So what I look for will be retraces on those kind of setups. That's definitely the way to approach it. Like what were we talking about? We were at Baidu for that. Let me go back to Baidu real quick, because that was a good example of hit our target, a little bit of a retrace, and I don't have to rush into jumping at it. With CLF though, I point out the 78-minute charts and we can look at it intraday, so it's not as complicated as looking at it from a daily standpoint. Because even if I look at something like a Baidu like this, is about to give our sell signal, fine, I'll wait for that to dip down a little bit, and we'll reload with it. It got a little overbought. There's your -8. Okay, now it's -15, a little bit of a decay on there. Okay, so fine. We'll just wait a little bit, get another signal. If it's higher, so what? If it's lower, so what? You just gotta go with the signal that we're gonna get. Now, if you're riding it from a move, well, that's a whole different story. You're gonna go over here and you're going to flip on your ABM, which would have had you selling anyway. You hit your target and you came back. That happens. That happens, particularly when you get overbought like this. And that just has to change your approach when you see this kind of setup where you've come to an extreme. And gosh, I think if we shrink this out, that will definitely be. I mean, look at that relationship. I mean, this is what you're starting to see on the market. All right, so it's not going to be any surprise that we're going to fade from the setup, and that's just a matter of paying attention to what the signals are. Now, also the fact that it hit the target, that I do see more downside potential to the market. I don't want to be jumping into some of these too soon. You know, um, Play a little bit here and there as we go. You wanted to see? You looking at the daily on CLF, or you want me to put an intraday for CLF? Because I don't even have dots hooked up on this, do I? Because we had it from our other setups. I don't always have them turned on. Let me see. Get the ratio hawk, catfish. Orange dot show me is not on. Let's turn it on. There you go. How's that? Okay, so there's your orange dot show me 3770 target, and that's consistent with the MBI signal, so not too far off that. Yeah, see, you're doing exactly the right things, Linda. I love that. That's perfect. Soda. Let's go look at some soda. We'll go back to Facebook if you missed it, because there's always relevant things to look at, particularly intraday. We should look at that overall setup. Alright, so what I like to do, and this is always a good practice for you, so you can follow kind of the way I approach it. I'll squeeze a chart, look at it nice and tight, and say, okay, fine. I begin to see some peaks. Okay. Am I at those peaks even though we're at new highs? No, not particularly. This is a kind of a little bit more of a serious drop off. So if we start to make a new high on this one, that's going to look more attractive from a short standpoint than a long. But for now, that's a buy signal at this particular point. So let's get a little more narrow into there. Are we overbought? Sure. Positive extreme there. What we did was we just retraced the positive extreme. Is this one also positive? It is. So you needed to take out all your positive extremes. So all these lows needed to be retested. And boy, didn't they do that very effectively. You gotta love how good they are at that. Did not get to your low short target yet. I expect that it will reach that though without much trouble. It's just going to be a matter of time. Everything else looks good right there. This currently 11 differential from negative 16. So went extremely overbought real fast right here intraday. So people are going to look at that as a mini topping setup. But you do have your buy signal, and that's going to turn around very shortly. I would look for my first improvement in a shakeout though. Because see, what I want to look for now on this one is when this yellow starts to come down and when it starts to flatten out at the same time the red is coming down, then you start to get your turnaround, and that becomes fun. You want to look at X and its random chaos event. Absolutely. Now we expected X to be dropping. Is dropping quite a bit. We were expecting a 2-day decline off this event. Okay? And we pointed out the last time that setup occurred was not that one. We were looking for a different one. So I gotta shrink it, that's why. I'll be scrolling back forever if I do it the hard way. Too far. Okay, look at how deep that event was. Nice, dramatic drop off. Had similar one right there. Let's expand that one a little bit. Alright, so this was when back on 4/5 of this year this took place. White-green setup, and it dropped from 28 to 26-ish. So that's $2. Let's see where we're at right now with this particular move. 23 to, well, what is it at? 22? Not quite as bad. Go figure. So interesting. Is it going to be a buy setup? You know, what's weird about this setup with X is not that great. With the kind of drop off here, moving down with the white, we would have expected the magenta to follow along with this. So this could be a little bit slower on a turnaround than maybe we were contemplating. And, you know, having the market with a little bit of a decline, it's going to make it a little tougher. Go back to that overall ES 5,000 tick. Kind of flat right there. Nothing wonderful. And then the range bars, likewise, gave a little pop back here. Came up to it. They're giving another buy right now. Up target is 1501. Kaboons will like that because you can jump on it real fast. I love some of these guys with the looking for 1 and 2 ticks or just for a point or something like that. Now, each one of these bars is 1.5 points, so when you're expecting that move all the way up to here, you're looking for a little bit more of a jump. We don't need to play for tiny moves, and this is why, like, I even posted that short setup last night. You know, it's 3 and 4 points. We weren't looking for, 2 points and out, or even something tiny. It was pretty decent overall play, and it becomes fairly straightforward with the futures. You can do it manually. You can do it through the automation. In fact, let's look at an automation. Do we have one in here? Oh, here's the Apple automation. Apply my corrections under that. I know. I haven't given out these for regular people indicators to use for stocks because I'm still messing with it. I gotta wait for that too. Sometimes what will happen, particularly with Apple recently, has been giving some errors in the data fields, so I like to do the correction on it. But so the principle behind this setup is it goes long when it's green trend and it shorts in red trend. Each of the little setups a percentage of the ATR. I think we got one for PCLN around here too. Oh, this is orange dots. People who have the indicators, they'll get one of these. This happens to be the orange dot number 1 setup. I don't even know what that's doing. 64% win rate. Not a very good win rate. 64%. But look at the profit factor. It's huge. 3.51 profit factor. It only trades 50,000 tick. It makes these big run moves is what it looks for. And that's all it does. And it's not going to do it every day. It's going to be sporadic. It's only going to win 66% of the time. But when you win, you're winning 3.5 times what you lose. Can you play something like this sporadically? No, you have to play it as the signals come because you cannot achieve the same profit factor and win rate if you don't do it every single time. You know, it's not a whole lot of trades, but it's just the way it works. What's in this one? Oh, this is the NQ Daily. Now this was nice because this gave a couple of signals. This was right at the start of the year, 14th. Most recent one was on the 24th of this month, and I wasn't playing for anything dramatic. We can look at what the numbers were. Got in at 28, it got in at 14, and it sold out at 44. Then it got in at 27.18 and sold out at 27.40. So it pretty much did the same thing twice. So back to back. Oh wait, we should look at the performance report for that because it's always good to see how it's doing over time. Off its equity highs. All of them, even the NBI Opus, originally because of the end of year loss. Was the very last trade of the year, and they flushed out all the stops, and so that took them out. But it's still 77%, 2.47 profit factor. Still very decent equity graph. No objections to it whatsoever. There was another one. I don't even know what this was. Cirrus Daily, gave a buy red dot. So, yeah, this is a good point to do this. Let's do the math. Alright. We have red dot buy signal. The high is 30, the low 27.5. So what are we looking at? $2.50. So almost $3. So you're looking for, hey, 75-cent discount to the close price here. So in that particular case, we're looking at somewhere around 28 3/4 becomes the buy for the setup. All right, and that's where you can begin to trail it lower and just cross back above that in this particular setup. Now, at that particular point, I want to look. Okay, am I still oversold? Yeah, I'm underneath. Not bad. So there you go, Cirrus Logic. You got it. You heard it here first, and you're right at where the discount value is. The upside target, 31.29. Don't tell your friends. Keep it a secret. Make some money, and then take them all out to dinner. Right? Isn't that how we do it? Is that how we roll?
What's that, babe?
Exactly. What else have I got? Oh, here's a ES. We'll go over this one tomorrow. This is the daily trend trade. So the daily trend trade, what it looks for is if the trend is green, and this is why you can see the significance of adjusting the trend model, because the signals are based on it. Buying, looking for a percentage of the ATR, and that's the way it sells. Let's look at what the percentage of the ATR is. Alright, so daily trend trade has a 15-point stop loss. Trails at a 50%. It's looking for 25% of the ATR, 14-period ATR. Okay, so it's doing that each day. And some days it gets stopped out a little early. Other days not so. Just depends. Like, this day missed all the decline because it popped up enough, and then it boom got stopped out for absolutely no gain. Oh well, it happens. Other days, it holds on throughout the whole time and, makes a move. It just does it every day. Uh-oh, you missed it. You're going to have to watch the replay now because you missed it and you missed us live. You see, this is what happens when you jump back and forth, you miss something live. This is not tape delayed. Well, it's, 14 seconds or so. Something to that effect. I think I had some other windows in here. We have the range bars. Apple 78. Man, I know we had a PCLN 70. Oh, maybe it's on my other version of it. It's on the other screens. That's okay. I got lots of different. Oh, here's the PCLN. See? Alright, so this is doing the same thing as the daily trend trade for stocks, and this is where you can get into the TMI. TMI. Okay, so what this does is someone's mentioning bathroom break.
Oh no.
That's the I don't know what's a better term for that than bathroom break. I mean, it is what it is. Yeah, we'll put up Amazon too. No problem. You missed Facebook. We'll get Facebook and Amazon back, but I'm just showing. Uh, Basically, even if you don't automate a setup like this, you can put it so that when you do the automation part of it, you can ask it to let you know when a trade is about to happen. And you can then decide, okay, I'm looking at additional indicators. Do I want to make the trade? Because this is just blindly saying because the trend is green, it's expecting higher price. Okay, so that's okay. Well, exactly. You'd be surprised. Things can change on a dime in these markets, and you've got to be cognizant of that. That just depends on your style. I mean, if you're swing trading, you don't need to worry about the fact that you saw something here live. You can go ahead and put that order in and let it percolate. Some things take. In fact, there was one that was percolating for. No, it was Prudhoe Bay. Let me put it up here. Um, he's probably not even on the live event, but that's all right. You never know. PBT. It's just been going across with all these wonderful little buy signals, but it's been just percolating across right here. It had the short signals, came down, hit the short target, put in the buy signals, and it's just creeping across, but it hasn't given the buy. It just keeps getting oversold. But this is what you got to love. Now, if you've got these and you see a situation where stock is going sideways and you're getting this much oversold in a sideways move, oh yeah, that becomes very attractive for a long setup. So, these are things that if you're seeing charts of mine that are going up and I'm not necessarily giving you all the commentary, hey, look at it, pay attention, and notice these things because they become significant and they're very powerful for moves to the upside. And I see so many people just miss some of these setups because they're just, oh, it's just another chart, and unless it tells me everything I need to know, buy at this, sell at this, I don't. Yeah, right. I want them to make their own choices, and I want them to be thinking about what they're doing. You don't just blindly cross the street sometimes just because it's a crosswalk. You actually do need to look and see if you have a green or a red light. Yeah. So yeah, I do expect people to pay attention to these, particularly when it's money. I know you say it's just money, but it means real things to real people. Yeah. Thank you. On that note, let's look at Facebook since it's all about networking. Dun, 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 dun. From a daily standpoint, it's not pretty. Not pretty at all. This is not what we were seeing from a Netflix right before we wanted to buy. So we can look at a 78-minute chart of it and see if that's any better. So is this something I would mess with at this particular point? No, but then again, we've had a pretty darn good earnings season, other than unfortunately that tepid Apple was a pain in the butt. I wanted that to go up so bad for people, but unfortunately, the best we had was the tepid buy, and I was like, All you can do with this, we had the bicycle at 497. I'm like, if you dip back below 500, you've got to be out of that baby, because as I've pointed out in the past, when these dot buyers don't get their way and something goes wrong, they flip and they go the opposite direction, and that's why Apple dropped from that 470 where their stops were. They were right around 475, and boom, you lost that next, 50 bucks, because these guys flipped around and had to make their money back from their entry. Right about the same point, they were in, I think, 510, 5.8 range. And so, you know, you'll get all these people talk about this and that, Fibonacci retrace and that. Again, while that's all great and fine, I can put Fibonacci's. In fact, I got Fibonacci's. You know what? Let me give you Fibonacci, because Fibonacci's a friend of mine. He and I went to school together. I can't believe you didn't.
For real?
I was just gonna say, I can't believe you didn't laugh at that. That was so funny. I am a nut. Okay. But, I'm a nut that loves math, right? Sadly, okay. And now you have a 10-year-old who's sitting there doing Fibonacci's, and we're walking down the street and she's seeing Fibonacci retracements, or watching Fringe and the door has 618, and she's like, hey, that's a Fibonacci retracement number on the door. You gotta love that. Now that's the kind of math and science the country needs. Alright, so here's my version of an adaptive Fibonacci. And, oh, hey, we got CMG on this. Okay, CMG, yeah, and a sell signal. Thank you very much. And you got yellow. Ooh, yellow overtook it. That could be ugly for people who like CMG. Don't talk to me if you like CMG. If you like shorting CMG, pay attention to this. But otherwise, ignore what I'm saying. Okay? Would everyone agree with that? Thank you.
Give him a chance to say no.
I know, I'm not going to give him a chance to say no. Just, if you're long CMG, ignore me, because that's looks to me to be a short signal there. What I would be looking for is the dip on this. Yeah, we got a dip on the magenta as well going on today. So lofting there. Now what this is an adaptive Fibonacci setup. And this is the argument that I get with people, is because when we come to, okay, and I'll give you an idea what the numbers are by just highlighting over it here. And well, let me increase the length of this thing a little bit. There we go. Alright, so the green line is 50%, fine, everybody agrees with that one. 61% is the blue on the upside, and the same blue on the downside of the 50% is the 23%. You see how that matches, isn't that great? Alright, so here you go. We can go to our inputs. Fibonacci level retrace. You see that name there. Wonderful. 53 periods. Why 53 periods? Okay, well, why not? What do we got? 20 some days in a typical month, so it's a little over 2 months. So fine, let's say we want to go a little tighter. What it's going to do is going to take the highest high and the lowest low within that period, and it's going to do a Fibonacci retracement. Alright, because I see some of these people put up a chart that you get a Fibonacci retracement from a year, 6 months, 3 months, 4 months, 189 minute, 240 minute. Just randomly, let's just pick some numbers, what the heck. Let's just say 22, which is just a typical month. And the point I'm saying with that is I could put a Fibonacci sequence in so many different areas that I will come up with every kind of retrace, support level, configuration you can imagine. All I want someone who's doing the Fibonacci is say, okay, fine. When I get to this 50% point, what is my probability that price is going to rise here or fall here? And I can't get an answer from that. Okay? They'll want to then say, oh, well, we got to look at this. Well, fine. But then don't tell me that Fibonacci retracements are the end all to be all. Because, fine, you were right here, high, came to 50%. Why didn't it go back to the high? Why did it go to zero? Okay, and I could flip a coin and be 50-50 on that. So how does that help? All right, sure, I can look to overbought, oversold situations, but this is just what I'm pointing out, when you need to be a little more critical when it comes to some of the things you see, and say, okay, fine. What I find, interestingly enough, is that when a zero line is slightly violated, oftentimes you'll get a pump back up to that 23% and you make a new low. So just because I see that correlation, does that mean that that's gospel truth? No. Though I do know that at about 78% of the time when it does do that, I'm going to get my retrace to a new low. That's at least a real number. and I can give you that and say to you, okay, I have this probability expectation, and you're likely to see a new low before you pass 38% Fibonacci or the 50% level for a stop, and that's something at least that you can quantify. Okay, just because someone draws a Fibonacci, that's not a quantification. That's just drawing lines. And that's not to criticize them, it's just to say that there's multiple levels of technical analysis, and what real technical analysis is, you know, I often will point out to people, I don't need price on my chart to know the general direction that I would expect. I can put my extreme histogram up here along with our indicators, and we can see what's a sell, what's a buy, and go from there. Now, yeah, we know if is it was it CRUS? I can go back to it. Didn't I have that chart here? Let me go. See, the nice thing is I can go to Windows, and this is all the windows that are open on my screen here. There it is right there. Activate, and it pops right back up. Yeah, we did the math, and we went and found our discount, and lo and behold, we're right at the discount entry level at a point where, yes, slightly oversold. I wouldn't call that dramatically oversold. We want to look at the extreme histogram, and so this is where it gets into, people looking at the chart and they'll say to me, "Oh well, you don't have all the different indicators." No, because I try to make the chart a little bit cleaner for people to look at, and it's not always clean. Oh, definitely, we'll get FSLR in there. Good question on that one. So there you go. All right, so it was overbought in red trend. That is not good. It never is. I try to tell people that, and they're like, but it just came off a bottom. Well, I don't care. If it came off a bottom and in 1-2 days it's overbought, it's overbought. There's nothing you can do about that. And boom, turn around to the other side. The shakeouts hold up pretty well. And this is another one where we talked about institutions, and we talked about, the level of interest. And when you stay inside of a negative 12.5 on the shakeout, you're okay. From a charting standpoint, that's not bad. It means you have active interest in the stock. There are people who are supporting it, and it's actively being traded amongst it. So that's good. It gets ugly when you start dipping below that negative 12, because this is when you start looking at what happened to Apple. And gosh, we kept looking for it to get back above, and it just couldn't get there. And it was like, it was unfortunate, but that's what, it's what it was doing. And so we cried, and we all sung. What did we sing Kumbaya for that? And for Apple, when it, and then we moved on. It just wasn't meant to be there. So CMG, looking at it from this standpoint, and this adaptive Fibonacci, we can adjust the ranges. So I can go in here and I can put in, 60 days if that's better for people to think of a couple of months. So this is taking the high and the low range from all the way back over here. So that's the low. Now you're at the peak. And what I find interesting about this, and so what you can look for, you start to see it cascading. All right. If we're in a downtrend, it's cascading lower. You're in an uptrend, it's cascading higher. The numbers are moving up with the trend. Now in this particular case, CMG came down to 50%. Oh, but it dropped below 50%. How? Why didn't it go all the way down to zero? Why did it turn around there? Well, we can look at it and see that it got, oversold in a chaotic event. Fine. Well, a mini. I wouldn't really call that too much of a chaotic event, but and then give you a green dot buy. Okay, that at least is a legitimate, reason to be looking for it on a buy return in that particular case. And the fact that it reached the highs and was a double top, well, half the people will say, "Oh, you're going to buy a breakout because it's going to break out to new highs." The other half will say, "No, it's going to break down to new lows," or retrace from there because of a double top. So you're always going to find half the people, well, not half, but people going in different directions on it, and they're all going to justify a different thing. And for each person, it's going to mean something else. At this particular point with CMG, people think, okay, broke out to a new high, it's going to continue to break higher. Fine, I have no problem with that if the readings supported it. They're not. Okay. It's just not. It's not my fault. It doesn't do, to cry about. Does it mean it's horrible? You're in green trend, coming off the red trend. It takes 5 days before we're going to know whether or not it's overbought or not. We can put an extreme histogram on here, and we can say, yeah, it got overbought right there. Okay, it went positive. These numbers aren't supposed to go positive. So every time I look right here and I can see positive, Alright, last time, positive, little retrace. Then a little bit bigger. Okay, positive, retrace. Okay, that's normal behavior, you know? Let's see, that gets a little thick for people to be seeing. And you know what? If you've got indicators and you want to have this Fibonacci setup, I'd be happy to give it to you. What I had worked on with this setup was, and I could never find something that was consistent, was to create a trend model that was based off Fibonacci retracements to validate them. And the irony of it was is that we came closer to it with the relationship of phi, which you'll find incorporated down here when I put up my power momentum 2. If I scroll that down, you'll see the negative 1.618, positive 618. All right, so we were able to use phi in that context, whereas just a general Fibonacci, the relationship doesn't hold any numeric value as far as being viable. Yes, people are still going to draw them. Yes, it's going to retrace to these various levels. It's going to look like it's supporting on them. But what you're not going to be able to do is say, okay, I have a 63% likelihood that in this particular case, it's going to hit the 23% Fibonacci and come back up. In this case, it'll be the 76%. And range, I typically did the 53 bars because the idea was if you have 22 days, you're looking at about 44, and you move into about a 2.5 month time frame, and you can start to incorporate in between cycles. I know that there's a lot of talk about Elliott wave, that kind of setup. The problem with the Elliott wave concept in my mind is it doesn't take into account the chaotic nature of human beings in the sense that they react violently to things, and you get these dramatic moves either up or down, and that's where that picture of the water dropping that I showed when it came to the fractal story, the compelling fractal story, because that would give you a visualization of how significant the initial move is, and then the ripples that come from it. And here's Facebook. So from our daily standpoint, you can see definitely an uptrend, rising retracement levels. All right, but here's your problem, and this just doesn't lie. Okay, we have lower shakeout reading, higher high. All right, so you have people distributing inside of this up move. Okay, that doesn't look good for me. I don't like the way that's looking overall, and we're not seeing super positive. The only element that is consistently good is the fact that this orange has stayed above on this ERH consistently all the way back throughout this entire uptrend. So that's your positive there. You do have the negative short, which was already taken care of. So the downside target on that. This becomes unfortunately a neutral. Now we can look at it from an intraday standpoint like we were just doing and get a gauge towards the end of the day whether or not there will be the potential for more acquisition. But from a daily standpoint, this has clearly been in distribution. Can this skyrocket the other direction? Sure. Let's see if we can see something where we were heading the wrong way and it just automatically reversed. I mean, see, that's not the case here. Here we had the nice incline, and then it shot up. So it's not doing that. So no, you don't have examples of it when the shakeout going one direction automatically flipping dramatically the other side. It's usually been a consistent effect. Now let's go ahead and throw FSLR in here. FSLR. Now I can tell you that now we're minus 7.5. We exceeded what my low expectation was, 98, 1498 and a quarter. Now we can be looking real quick at what the daily ES setup is turning into. Alright, so now that the magenta is down to 2397 versus 2373 the day before. So very close to seeing that magenta roll over at the same time it's going to cross for sell. That's going to turn us, well, at least me, negative on the ES. That really hasn't been there dramatically. We were expecting minor retraces, particularly from the INX to cash index, just to retrace the positive extremes. I wouldn't call this devastating by any stretch of the imagination yet. Alright, FSLR continuing to slide down there. Finally gotten into our oversold. Unfortunately, what was happening here is we get the nice buy signals, and then all of a sudden, boom, yellow popped up on top, and still in charge right now of the setup. And so what I'm looking at tighter here will be how oversold have I gotten. Alright, so now both of them are negative. Love that. So, yeah, I would actually be looking to attack right in here, and particularly on a down day like this. See, the problem is that I always get a little bit more skittish and wanting to create new long setups when I know that the market is about to, suffer some pressure. I wouldn't call it, steep or anything like that. It's just going to be under pressure. People are going to be looking for the buys on the dip, and that's all great and dandy, but it's going to take more than a day or two to resolve some of these things. And tops take a little while before they build up. People are going to see this as an opportunity to jump in at a discount, but they're also forgetting to the, at the end of the month. And so people are going to want to take their gains and show a nice January closed. Period. Done. Finished. For tomorrow. And, you wait till February to reload. But I wasn't looking too fondly for February anyway, just generally. Needless to say, though, you can see the rising, and that's an interesting one, rising Fibonacci lines into declining price. Didn't quite have that. Actually, I've been right about here, supported off those. What are we at now? We're at the 38%, 23% Fibonacci here from the peak highs. And that's because we're looking at a couple of months going back to the lows. So these lows keep rising from our Fibonacci, and it's catching up. And typically when you get this kind of downturn, I look for these two lines to meet at a base point and then revert from there. It's going to be kind of interesting. Alright, let's look at some more intraday. Oops, right back here. Alright, Apple 15 minute. It's going to resolve on that red dot short, no change from it. You've had some little short interval up times, but still holding up quite nicely, to be honest with you. Could have seen a several dollar decline beyond where we're at right here very easily as it tries to retrace, but it's already going to get oversold on this minor dip, so that's not a horrible. We had the Apple Daily. Let me go back to that one. I wanted to see how those readings were. Nvidia doing a little bit of the retrace off hitting the target. That's fine. I'll give that next buy setup when that reloads. That'll be fine. We'll do that. Red trend off that MBI. You weren't looking for too big a discount. You had $8 there. It was only a couple of dollars from that 58, so 56. Well, getting close to where you would want to be for that a long swing MBI trade. But again, what I would typically do is probably start with the close and then want to trail it a little bit from there. Because again, you didn't get as much of a pop from that, and I kind of expected that because you really haven't seen any improvement from our ERH. And look at the shakeout. Again, there's the negative 11.5 right here. Consistently still minus 21. You just don't have big institutions buying in this setup. They're just not there. And that's unfortunately just a reality of what's going on at this particular point. There were some others that you wanted to look at. Let's see. Did we do Amazon? Let me put Amazon up there real quick. Oh, this is going to be the SPY daily. -8. Okay, SPY 78 minute. Yeah, no surprise. Positive extreme right there. Just took it out. Perfect. That's what you want to see to relieve overbought. It's critical. Let me do PCLN from a daily first. We looked at it earlier, I think, but I wasn't thrilled with what I was seeing from the daily. We had the short right there as it popped up. Made that same dip that we saw from Netflix, right there, coming in through it. And, it's pretty much hovered right around there. It's not horrible. You still have orange well above, so we didn't see any change there. Actually could produce a buy here in the next day or two. So we'll keep an eye out for PCLN. It did what it was supposed to do from a short standpoint, and now it's got a base a little bit. 10-minute, nothing special. 78-minute had been nice. All these buy dots had been hitting their targets. The most recent one, way too early to tell what's going to happen with those setups, but and this is why I always like to look at. You thought the PCLN looked bearish overall from the daily? Yeah, it was, but it's going to turn around because you can see that this drop off. If this begins to turn now, we'll know in another day because you'll either get a cross off or this will continue down. So I'm not suggesting anyone should jump on it right now. It's not ready yet. So yeah, we're in agreement on that. What was my other one? I was going to go Amazon. That's where I was going to click next. Amazon. Alright, so Amazon gave its little buy signal, popped up there. Did not give a full day buy signal yet. So that's interesting because it's going to pop up here. May finish lower, and then you have to watch for the open tomorrow because it could flash down along with the magenta flashing down. It was clear that the shakeout dipped lower, no question about that. And this is kind of that long flat across, but you can see the yellow cross there. And now you would look for the first. Now, this is another important one to watch for you, for those of you who pay attention to your indicators that you have. This red starts to dip down, you look for a bit more of a decline. So if you see the first decline in the earnings, it's 1816 now, 1816 again. If that dips down, I look for a little bit more of a retrace to continue. So that's worth pointing out. Still holding up with the orange above. So, and that's just because it's been bullish for quite some time. But again, markets fall so fast that these gains could be wiped out instantly for a lot of this, even the year. Is what I've been saying. Well, in fact, I said it before we started. That's entirely possible to just eliminate in a day or two everything that's been supposedly built up. MA, this has been an interesting one because we had this whole run up here where some people wanted to be short. They saw this signal come in and they just automatically wanted to short it. I said, no, we were looking for discount to the high side and we wanted to get lower shakeout. Well, we got a little bit of a dip right there, so it became attractive to jump on it. It was right around that 415, but we kept seeing continuation of rising shakeout. And if we looked at Power Mo 1, we'll put the Power Mo 1 up here because it was a good point to make, because while I haven't been popping it up everywhere, I don't have it on that setup right there. Down power, no. Oh my goodness, I don't even have it on this chart. Let me find where a chart that I do have Power Mo 1 built in. Because I've had to go through and I changed a bunch of them. Power momentum. Da, 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 da. No, it's not in there. I'll just go ahead and put it in. What the heck? We can go to insert analysis technique. We can go to indicator. We can go to Power Mode 2. No, we want just Power Mode. But we could do Power Mode 2, Let's go ahead and do that, because we can do Power Mode 2 and I'll show you the difference between the two. Insert the analysis technique. Add another Power Mode 2. Alright, in this particular case, what we'll do is we will turn off these lines. Dun, 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 dun. I have a microphone in front of me, so I cannot type very effectively. Style. We need histogram here. A little darker. This one even darker than it. I'll darken these lines up too. Why not? Scaling, we want to go with no axis. Yeah, 5 is fine. And voila, there it is. Did I leave one of those? Oh, I forgot to turn it into a histogram, that's why. Histogram right there. Alright, voila. So, there's Power Mo 2. This is also power mode 2, but it's showing the lines for power mode 1. What I was pointing out with MA, consistently, the cyan was above. And it wasn't until right about here that the cyan flipped. It was right about there at the same time that the shakeout dipped below after being at the sell line. Then I was like, now you can short. Now. You know. But this is the thing on stock twits. A lot of times you get people that are just anxious. They want everything right now. Feed me instantly. Give me the instant signal. I want it to retrace exactly to what I want right now. And, the markets don't work that way. But you can see it's been a nice sell-off. Got a little oversold. Ended up with a little bit of a buy signal, but it's been still cascading lower with the magenta. And almost a complete reset, though, on the shakeout. And so when that bounces back up, should bounce up to new highs. So that's how you read that. Google. Everybody loves Google. See the little arrows everywhere. Got arrows. Don't believe the arrows because those were just old from before. Alright, so let's clean up some of these lines so they're not in our way. Alright, Google. Okay. So, Google had this little buy crossover event there, but it wasn't quite oversold. And you see, then it got oversold and became very attractive right in here. And then it was boom right before. And interestingly enough, from a 78-minute standpoint, it was actually very attractive going into that end of year setup. That was what, the 22nd? Yeah, the end of year back over here. The nice bullish move. And what date was this daily? The 23rd, it gave a buy signal from a daily. What was that target? Dun, dun, dun. 759.25 for the extreme fractal catfish long. Did it hit that target? I think it did. Let me put an arrow. There we go. What was that number again? 759.25. Oh, well, I can look at the high right here, 760. So, yeah, it did meet it. Alright, that took 1, 2. Oh, wait, did it do it right here? No, 58. 56. Oh, it took all the way right here to do it. Wow. Okay, well, hey, Google hits the target. Headline. That was, yeah.
That was easy.
Went the full length of time, too. Jeez. Craziness. Went over Netflix. Win is another one we haven't gone over. What short signal did you not see? On MA? It was pretty clear with the drop in the shakeout. Waiting for Win. Don't bet on it coming anytime soon. Alright, so Win had a short signal right back over here. This took until the next day, actually, before the shakeout dropped back below. And it crossed over, and it's just held up pretty nicely. It hasn't been anything catastrophic. It hasn't even reached the full downside target for that. And you've actually passed your time frame, well, just the other day. So it reached that... yeah, no, MA was clearly had the sell signal with that decline in the shakeout, and then the both power modes are given the sell. I'll put it back up again because don't want into confusion. Alright, so dip in the power mode, you have the crossovers where you started to get, you had slight increases, 48.62, and then it was 48.46. Coming into the next day. We actually saw the short signals develop. It was interesting because all the 78-minute charts were right here, were going, we're all bullish, and then it was this last day, none. There were no buy signals at all. I mean, it was crazy. You went from having all of these, having buy, and there was nothing. And then boom, crossed over, fading shakeout after being at the sell line. Now, whether you chose to just sell at the point doesn't mean you have to short. Okay? But you've got to be prepared, and you would have had to have your stop move up dramatically when you get to this point because it's not going to last. It's not going to last. And that's what the whole point of having it there was. It lets you know it's not going to last. You're buying into fool's gold. There were people here who were saying they wanted to buy at this point. I was just, really? Wow. And, it wasn't that bad a drop overall. If you consider, $15 not a bad drop. Yeah, let's do. We wanted to do FSLR. Oh yeah, we did FSLR, but let's do USO because we bought a put on USO. Maybe it's jumping now because of fears of inflation. Yeah, definitely. I don't have a problem with the USO right here. I'm sure the shakeout has just started back up. Got a nice little pop going right in there. We knew it was bullish. There was never any question about that. But what we had to take into account was that we started to get the sell there. We're going to get another lower sell, and I'm probably going to have us add into our 36 put setup to go ahead and add into that one, and then we'll probably create a ratio spread within it. We got plenty of time. That's the beauty of it. We bought a out of the money 36 put through March, and then we sold puts against it at a lower strike that would have guaranteed a positive setup regardless. What I'd love to do would be able to get more worked off that. It's going to be interesting. We knew we were going to have a little bit of a pop in gold here after it got weak all of a sudden. And some of this is going to be, instead of going into precious metals, then you're going to see commodities like oil, not necessarily natural gas and that, but it's going to become an alternative currency. Because people can then use it as a way to hedge against the inflation, as well as fight against a declining dollar. And I know that there's some OPEC countries that would love to have it priced in euros temporarily, but that's not going to be a safe haven either. What I find interesting is I think that the Brits are actually working on trying to become the default currency. And I think they've made some excellent strides with what they've done. And I definitely think they want to see the pound resurgent. So that's going to be kind of interesting as that develops over time. And yes, you can even play the euro with the NBI Opus setups. In fact, if we go to the website, we should do that real quick because not everybody looks at this. And we'll go over this stuff more in depth tomorrow. That is 75%. Oh, what was that? Bernanke praying on the... Jeez. That's funny. I lost it. There we go. Alright, we want to go to NBI Opus Strategies. And right here, the performance reports. I had to remove the one we had down at the bottom here. People were... And, okay, this is my world where we get hackers attempting to hack into these program profiles thinking that they're going to find my NBI Opus program. Really? But yeah, so I'm going to put them back up there. We had the... ES 10,000 and 5,000 tick that were given by a member, and then this just happens to be the Apple setups. And what you can do is you just click it, you download the file, and it gives you what the overall performance report was. And so he created this one on Apple, and it was producing 12.93 profit factor. What was that win rate? 95% win rate. And the nice thing about it is you scroll all the way down. Dun, 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 and at the end of it, okay, it gives you all the inputs to put in. So in this case, this 1,000 share setup, the ATR links, everything, and then you just go in and you fill in the numbers and whether or not the setup is true or false. I think I can actually increase that back to 100%, so it's bigger and easier to see. Alright, so you just go through each of the different setups and fill in the blanks, and that's all it takes. And so once you're done doing that, you're going to end up with the same results and the same buy signals based on that setup. And that's how that works. LVS from Miss Daily. I was negative on LVS right back over here. What was that at? 53. What are we at? 51. It's not been much of a drop. That's not much of a drop at all. Can't complain about that. Can't even complain. Goldman Sachs. Let's take a Goldman Sachs. Nobody likes Goldman Sachs. Alright, Goldman Sachs puts in an orange dot buy setup. Go figure. What's the target? 150.32. Beautiful. Look at this separation between bears and bulls with the orange way up on top. This whole run. Um, it's just beautiful. But now, ooh, now you're making new highs and you're starting to get lower readings. You haven't had much shortage, still maintaining bulls on the upside of it, but now you're well over purple line. Um, would I be taking that setup to the long side? No. Still a buy from it. I'll probably be wrong. It'll probably shoot up there and hit the target. Um, but do I find better setups that are, more oversold than that? Yeah. So why wouldn't I take those? This is the thing. Some people get attached to a stock or something and they just want to trade it to trade it. I don't need to do that. I can look for ones that present better from an oversold standpoint, and you can pick a series of them if you want to break out your portfolio into different stocks, fine. But even within a stock, you can break it up into different time frames and achieve your same kind of diversification. Um, and you see me do that with the arbitrage using the 78 minute and then day trading in between a 15 minute and that the opposite direction. I do it every day. I mean, that's just what you do. It's prudent, it's a smart way to trade in general. No, you're not attempting to kill the market at that particular point, but so we're looking at GS. I then want to take a look and say, okay, well, is the FAS looking strong? No, FAS is not looking strong. Still maintaining great trend, high shakeout readings. I mean, those are through the roof. Starting to get some weakness right into the power momentum. Clearly been overbought. What was it overbought? Plus 27 on the differential. Ugh. Ugh. Now that's got to be retraced. Did that low get retraced at 140.76? 140.92? 141. So no, it hasn't been retraced. So that's still bearish. I would still be looking for that low to get retraced. Oh no, did you see what I did there? That was bad of me. I blended the two. So now I have to go to my scaling. Oh, and then I just put it into that one. Let's just make power mode disabled. There we go. Just like that. Got rid of it. You want to look at soda one more time. You want to intraday on soda or you want daily? Soda? It's not Pepsi. Soda Stream? You never heard of Soda Stream?
No.
Never mind then. Don't worry about it. It's okay. You don't. Beauty of the MBI and stuff. You don't need to know what a company does. You just need to know the symbol. That's it. Just the symbol. All the math is done for you. Calculations are in place. All right. So we looked at it from a daily. It's going to give a buy signal here at the end of the day, most likely. Wow. Go figure that. Still pretty strong. I mean, the trend holding up. So what I like to watch for, particularly when I'm looking at my ERH, I like to watch to see if that the distance between them maintains a parallel, or if it starts to tighten, then you begin to see your imbalance. There have been a couple of ones recently that had a negative divergence where you've seen it go the opposite direction. Those don't happen very often. I'm actually going to put a strategy together that will just deal with those kind of setups when they take place. Here, though, you still have the magenta going south. And let's look at it from a 78-minute standpoint just for the fun of it. Because the 78-minute is good to give you kind of a 5-period breakout of dailies. 10-minute, and that's for 10-minute. Though that was an interesting 10-minute chart there. Looked attractive from a day trade. Well, we got 12 minutes left to close. Alright, 78-minute chart. See? Beautiful. Dip to red trend, nice buy signals come in place, boom, next day opens up, and this is the beauty of trading these from a swing, because even from here, when you have multiple dots, it's the lowest dot for your stop, so came very close to getting the stop out right at that particular point. You get additional buy from the same people, okay? This is interesting. We saw this on Google too, same setup, and the full up target for this one back over here from that one, 53, and I had a minor dispute with I think it was the revenue on StockTwits, where he was talking about anytime you're buying lower, you're averaging in, and it's no. If you have specific signals, specifically within, I don't care if it's multiple stocks. If I was trading 4 different stocks and got 4 different buy signals on different days and trade for those specific targets individually, that's not averaging. That is playing a very specific target. And he disagreed. That's okay. People can disagree. Not a problem. We'll still be back the next day. We don't have to get angry. We don't have to fight about it. We can just disagree. And we're okay. You know, sometimes, right? So 78-minute chart, fine with there. Played for 1 point. Yeah, well, okay. You can do that. But see, this is the thing. That's the beauty of having the fractal setups, because we don't have to do it for just that. We have to take advantage of what is, and whether it's a point, less than a point, doesn't make any difference. You just got to go with what the signal says. In this case, from that close in red trend, geez, what did you have there? 50, 57, and the target was 51.90, so it was $1.40 on that move. Not bad. That worked. What was the other one? Facebook. Let's do Facebook from a 78-minute, because we're getting close to the end of the day here. Does it give a buy signal? Does it give a run? You don't have to worry about me on it, because I'm not in it now, because I got stopped out. We took our 8% gain, left, moved on. No, and no. Let me rephrase that. No. And no, I don't have a buy. Should I rephrase it again?
This is what we were talking about last night.
When no is no? What were we talking? I can't remember now. We were
You have
laughing.
to wait for the right setup.
You have to wait for the right setup. Exactly. This isn't it.
Because you're not long doesn't mean you're short.
Thank you for that. I'm glad you reminded me. Just because you're not long does not mean you're short. It sometimes can just mean that it just isn't attractive from a risk-reward standpoint. And leave it at that.
You're welcome.
Thank you for that. That was good. Appreciated that. Alright, we're closing out here in the last couple minutes. Anyone want to see something intraday? Let's look at Apple. Ugh. What do you say to that? Niche? It's okay. Every 10 minutes we get my girl singing Les Miserables songs. So, you know what? We should do that, because that would have been a good choice. Which one? We can hear the people sing? Or can you hear the people sing? I'll play it in the background. That'd be a good one for background noise. Because there are going to be some angry people here. I mean, well, really, I mean, we've spent how many trillions and we still can't get a positive GDP? Really? I mean, come on. Yeah, I'm an angry man. I'm not French yet. Yeah, well, you know what? The rates. Gerard Depardieu, who played in the movie version of Les Mis, just for a trivia standpoint. You can see it on Netflix. No, what I was going to say was that you've had this dramatic, cash infusion, and we're not getting anywhere. And until you have a pro-growth policy, it's very frightening. The only other issue is that we know that there has to be double-digit inflation for multiple years going forward in order to cover it, and that's going to happen. And if you're not prepared for that, and unfortunately, most people aren't, because buying into the stock market is not going to be enough. You're going to have to be diversified into alternative currencies and that. And, I feel bad for people who don't have offshore accounts. I mean, really, I do. Because you're going to need them. And, that's what we were talking about France, because, the only thing that held me back from moving us to France was, the confiscatory tax rates, but we're going to be reaching that here in America, so at a certain point, not going to make any difference, and then, you're free to go wherever. Then you can do what you want. Do you hear the people sing a song of angry men? Okay, PCLN is... Oh, first time yellow, moving above on PCLN 78-minute. That's worth noting. We haven't seen that in how long? Holy mosaic. All the way back over here was the last time it happened. And that was on a off-highway event. We're not even in an off-highway event. We're right in the middle of it. So keep that in mind. Who else have we got here going into the close? Google 15-minute. That's ugly. Getting oversold, but it's still ugly. And Google 78-minute. Yeah, it's just always crazy to me too. I just shake my hands and they come up, they hit the freaking target, and they sell out. It's just crazy. But we saw it with Nvidia, we see it with all the different ones, and it just throws people off that it changes that rapidly, and that's the dynamic nature of things. There's going to be another. This is what I tell people too. There's going to be another buy opportunity another day. Don't get married to these setups. You got to be flexible, and if you're going to be a longer term swinger, you've got to have your correct stops. And they can't always be. And this I have fought this one for years. This percentage of your portfolio. The market could care less what your portfolio is, what your percentage relationship to a trade is. It doesn't care. What it does know is it does know what its typical average true range for its stock is. And this is why you see that these calculations are based off that average true range because it's quantifiable. Alright, so I can go to my average true range and I can look at it for Google and I can say, alright, a 78-minute chart at this particular point, $4.37 is the typical expectation range for it. Now, we can get into a debate as to whether 2, 2.5, 3 times the ATR is a reasonable stop. Fine, I'll have that debate with you. That's reasonable. But just suffice it to say, for every increase of half a point in your ATR, you'd better have a variant or at least a coefficient of it for an increase in your profit projection. So that becomes, okay, how strong are your momentum indicators in being able to give you that matchup that's going to give you the proper return so that you can maintain an excellent win rate. Fine, doesn't do you any good if your profit factor is -1, meaning you're losing more money than you're gaining. And this is the difficulty that you'll have with your MACDs, your moving averages, most of your stochastics. They're going to give you win rates that might get you into the 55-56% range, maybe a little bit higher if you're careful, but they're still going to produce negative net returns for your overall portfolio, and they're going to give you drawdowns. And I understand a lot of people don't want that, they don't want to respect it, but it's the reality. And I just pointed out, and that's why I've done the studies on it and put them out there for you. So as we move into the close, though, I'm going to go ahead and shut off so that I can be prepared to do my thing for the end of the day. So look for us again tomorrow. We'll be back. We're going to talk about strategies and setting them up on TradeStation. So everyone, take care. You can leave any requests in the chat.